Bitcoin to gold. So has not broken its uptrend, but has had a setback in here as Bitcoin has settled down and gold has continued to go up. Our bet is that Bitcoin will continue this uptrend over time, but we are paying attention, trying to understand what is gold telegraphing relative to Bitcoin.
A look at the numbers confirms this. Both new and existing home sales are at historical lows. The inventory of new single-family homes for sale is piling up, reaching levels last seen before the '08 crisis. So, what's a builder to do? It's expensive to carry all that inventory, and the current strategy of subsidizing mortgages isn't working. Our speaker predicts that builders will eventually have to resort to a more direct approach, cutting prices. This could be a significant factor in bringing down the Consumer Price Index, CPI, which tracks inflation.
If we are right on what is going to happen, then the trade deficit may not go down as much as President Trump would expect or like, because we do think real GDP growth will be stronger than expected, and we can't produce everything in the United States. So we think imports will stay stronger, surprisingly strong, in the years ahead. Now, here is, we spend a little time on housing just because it's, wow, what a story. Here you see pending home sales deteriorating again below '08, '09. That's really an affordability problem. And, a whole generation is being deprived of their first homes. And of course, President Trump is going to make fixing this, his next year's, or this next year's priority as we move into those midterm elections. Here you can see both new and existing home sales, very low by historical standards. You can see new one-family homes for sale. Look at that inventory increase. It is almost as high as it was pre-08, '09, pre that crisis. How are they going to clear this inventory of homes? It's expensive to carry these homes. Well, they're probably going to have to cut prices. They've already been so-called buying down loans, which means they subsidize the mortgage rate. That's not working. I think actual price cuts, which will get into the CPI, and would be one reason that the CPI is going to surprise significantly on the low side of expectations. Here is the year-over-year change in prices. So you can see existing home prices. You see what happened during COVID, up to 25% on a year-over-year basis. They're down into low single digits now, probably will decline, especially if we're right, that new home prices actually start falling a little faster than they have been during the past 3 years on a year-over-year basis. To keep us honest, I feature the dollar because there are so many headlines about it, and you can see it has had a correction. It has not broken its uptrend for the last 15 years. It's probably in a new range, but we think if we're right about this supercharged or turbocharged expansion with innovation at the leading edge, we think that the return on investment associated with that innovation and with these new tax laws and with the deregulation is going to go up. The return on investment in the U.S. is going to go up relative to that in the rest of the world. Here you can see the trade-weighted dollar from a different angle. The previous one, this one, was based on 6 major trading partners. This is 26 trading partners, and on that basis, again, the uptrend has not been broken. We are in a little bit of a range. Just showing you corporate profits, how healthy they are, and this is the best measure of profits. It's adjusted for IVA and CCA, and that means it's adjusted for distortions associated with both inflation and deflation. So these are real profits, and they look very healthy. Now, we know that a lot of companies have not been investing enough for this new age, and it could be that margins come under pressure for that reason. Here is the same for the S&P 500. It has been obviously helping the stock market. We think quality of earnings is going to become very important moving forward, and those harnessing new technologies and driving growth that way are going to, we think, are going to benefit mightily. Here is that metals to gold index. I will say it's curious, gold breaking out to all-time highs relative to metals. What is that telling us? I still keep in the back of my mind, is there something, is there a deflationary bust out there that's causing this and fears associated with it? Maybe in China. I don't know. I know that the property cycle has not gotten better there. And we also know that investment spending is still up to 40% of GDP in China. We're only at 18% in the United States. So there are still excesses. They're funding a lot of things, including nuclear, and we think that's good, and all kinds of power, that's good for their competitive advantage. But to get to 40%, I have a feeling there's a lot of wasted spending going on, and that is a recipe for deflation longer term.
The video also touches on the relationship between Bitcoin and gold. While Bitcoin's uptrend is intact, it has had a recent setback as gold has continued to rise. Cathie would bet is that Bitcoin will continue its long-term uptrend, but they are paying close attention to what gold's outperformance might be telegraphing. Finally, the discussion turns to a topic that will likely define the next decade: artificial intelligence. The uptake of new AI technologies like ChatGPT is eerily similar to the early days of the internet, around 1995. That period led to a historic boom in the growth sector of the market, which eventually went too far. Our speaker believes we are just at the beginning of a similar cycle.
Here's the long-term Treasury yield over 45 years, and you can see it broke out. It's now levitating. We would not be surprised in the next, say, half year to see it go back to that 3% range, that base that you see in the 2010 to 2020 range is probably now going to be the low for this cycle. And we don't want these rates to go back to zero because that was a very unhealthy environment. We think the market's working much better now. And according to this metric, which is high yield spreads, the market is seeing very little risk out there. We think there are excesses in the bond market, and we're certainly seeing, I think this week, record highs in commercial office delinquencies. I think 11.7% was the number, higher than in 08-09 by roughly a percentage point. And yet, no problem according to this much broader based measure. We think that the search for yield out there is where the excesses are, and there's too much risk being taken in the bond market by investors. And this last chart, Bitcoin to gold, so has not broken its uptrend, but has had a setback in here as Bitcoin has settled down and gold has continued to go up. Our bet is that Bitcoin will continue this uptrend over time, but we are paying attention, trying to understand what is gold telegraphing relative to Bitcoin. So with that, I think I've peppered in a lot of innovation. I'll end with this. Brett Winton, our chief futurist, featured a chart today during our brainstorm, which compared what's going on now with ChatGPT and other LLMs, chatbots, in the consumer space relative to uptake in the internet days on PCs. What we're seeing, it suggests that we are today where we were with the internet in 1995. And 1995 through 1999 was the biggest burst in the growth sector of the market in history. It went too far, too much capital chasing too few opportunities too soon, and so it ended badly. But we're just at the beginning of this, and we're pretty excited about it, and we think that this is more more on the consumer side. In the enterprise, so you've heard about the MIT study that the Wall Street Journal featured saying no productivity gains from AI, very hard to see. And I was on a panel with two people who are very senior, one heading up US commercial, and we asked this question, and she said, well, it is true. What happens with Palantir is they'll go in because the CEO has asked them to come in. And they bring the CTO, CEO, all the seniors into the conversation. CTO takes it back and says, okay, well, we need to do a McKinsey study around this. So they pull the pilot from Palantir, and then 1 to 2 years later, when there are no productivity gains, they come back to Palantir with a completely restructured technology staff, mostly because there has been so much foot dragging, and they then engage. And the productivity gains that Palantir is helping enterprises evolve and enjoy are astounding. So just listen to one of their quarterly calls to give you a sense of how astounding they are. And so we think the productivity cycle is going to be very powerful.
So there you have it, a comprehensive look at the economic forces shaping our world. From the challenges in the housing market and the subtle signals from gold to the powerful underlying wave of technological innovation, it's a fascinating time to be watching the economy. It's a period of both significant challenges and immense opportunities.